Bitcoin now looks primed to rally higher following a bullish start to 2025. But is the market really as healthy as it seems, and can this momentum actually last? Today we're going to be doing an on-chain and data-driven roundup of BTC, and where better to start than the Puel multiple chart we have here on BitcoinMagazinePro.com. Now this is looking at the daily revenue of miner earnings in USD denominated terms compared to a yearly historical previous average. And what we can see is currently this is looking very healthy. Post-halving, we always see this long drawn-out period of decreased miner revenue, which makes sense given the fact that block rewards make up a substantial part of miner earnings, and when that's cut by 50% instantly, that obviously has a pretty negative impact on their earnings. But this has climbed above a value of 1 and is now looking like it's really settling above this. We've actually come down and retested practically this value of 1 over the past few weeks. And what I can do is same drawings from last time really. If I just draw on here where this value of 1 really is, we can see that historically this has actually been a pretty interesting turning point for BTC price action, especially after we have this initial bull market rally to the upside, halving where we dip back beneath this, consolidation beneath 1, back above and retest of this value of 1. That's usually an incredibly bullish indication. The previous cycles data is slightly warped given the fact that we came above and back below due to the COVID 2020 dump, but we still had this consolidation beneath before we rallied above. And once we settled, kind of set a new foundation above this value of 1, it again provided fuel for the fire to rally higher, and same back here in our first halving event. So now things are looking pretty similar to what we've seen historically and incredibly bullish from a mining perspective. Then if we go to the MVRV Z score here, again we have substantial upside room to go. There's absolutely no indication that a BTC top is even close to being in. We're considerably below historical average peak areas according to this data point. And before you say, oh, but diminishing returns, we're not going to reach this upper red region here, while that may be true, what we can do is look at something like the MVRV Z score 2-year rolling chart, which only takes into account recent data, the previous 2 years of standard deviation data. So it's actually accounting for the change in market dynamics, supply and demand economics, etc. And what we can see is, again, even according to this metric, things still look incredibly bullish. We still have a huge amount of upside potential to go before we surpass values of historically 3 or even 4 when we're getting close to a cycle peak. Right now, again, we've just retested a value of 1, so plenty of upside room to go from that perspective when looking at the unrealized gains and losses of Bitcoin holders. And what we can see, I don't know if you've noticed this as well, but while we are seeing quite a lot, got there in the end, seeing quite a lot of greedy market sentiment and really incredibly bullish social media posts, it doesn't yet seem too out of hand. If we look at something like the Fate and Greed Index chart, I know this is a pretty basic chart here, but as I filmed this, we're at a value of 84, which of course indicates a somewhat greedy sentiment, but this can be sustained for months at a time. What we can see from the 2020-2021 cycle is once we get values of 80 or so, it's pretty healthy. It indicates that we've got a strong bullish sentiment and bullish momentum, but it doesn't necessarily mean that we're overheated. It's only when we start getting here like values of 95, up here 95, 97, etc., that we really need to start thinking maybe sentiment needs to cool off slightly. But things just look incredibly bullish, incredibly healthy. It's amazing that $100,000 just is normal now. We're into 6-figure territory, and once we see a dip to 100K from a new all-time high at 109, everyone's thinking that this is a crash, when it's crazy to think only a few years ago we were at $15,000, and considering we may jump back down into single-digit territory. Not single digit, single thousand, you know what I mean. What we can also see is looking at the active address sentiment indicator. This is one of the only slightly less bullish charts. We can see a decrease in network activity of the past few weeks, just general less network usage, which maybe indicates that retail haven't flooded back into the market yet, which does give us some optimism going forward. But we can see, if I just zoom in specifically on the active address sentiment indicator here, we have seen price go above this upper red deviation line, which has historically indicated potentially overheated conditions. And while it doesn't necessarily indicate that a big retracement or anything has come in, maybe a little bit of a cool off period may be due. But again, until we actually cross back beneath this red deviation band, it doesn't necessarily indicate anything too bearish. We can sustain price action above this for some time. But if we are to see a little bit of a retracement, where maybe can we look towards? Well, here if we go to the golden ratio multiplier, which over this cycle has been incredibly accurate calling moving resistance points for BTC, both our at the time all-time high in March last year when we hit this red 2x multiplier band, and previously just in the last few months as we found resistance at this green resistance band, this 1.6 accumulation high multiplier. This currently sits at around $112,000, but of course is increasing every single day. So if we are to rally to even higher highs, new all-time highs, then I think around that $110,000, $112,000 might be a good target to look towards. But beyond that, we can look to something like the Bitcoin cycle master chart, which again has timed the Bitcoin market cycle peaks pretty much to perfection throughout all its history. And we can see that this aggressively valued, this orange line, is currently situated at $120,000, but again, increasing every single day. And currently, as a potential cycle peak target, looking at this overvalued red line, it's currently at $194,000. So we have, again, considerable upside room to go, even in spite of some potential short-term volatility. What we can also see is looking at something like the short-term holder MVRV. This is looking at the short-term holder realized price, or the average accumulation cost basis of new market participants, and just looking at the relationship and ratio of that price and the actual underlying price of BTC. If I just zoom in here, we can see the short-term holder realized price is currently at, we'll round up and say $90,000. But one interesting thing to look at, and something I always like to take into consideration when analyzing this metric, is if I just reload the chart. Slow internet, might take a second. Give it another refresh. Fingers crossed. We'll come back to that chat. We go for now to the value days destroyed metric, multiple, sorry. What we can see is this has cooled off substantially. So what we can see is this is weighting long held BTC, especially substantial amounts of BTC being transferred and just converting that into US dollar amounts. So for example, if I held one BTC for 100 days, I would add 100 coin days destroyed. We change that into a USD value and just average that out. Then we can get this value days destroyed to almost measure the velocity of BTC movement. And when this spikes considerably to the upside, like we saw last year at our peak, this indicates considerable profit taking from the smart money, Bitcoin whales, sophisticated investors. Whereas now what we can see is, even though we did have some profit taking from these large players over the past few weeks and months, especially as we first passed $100,000, this has now cooled off nearly into this green cool territory, indicating that these long-term holders have massively decelerated their profit taking and are now presumably holding in anticipation of considerably higher prices. Got an error there, so the short-term holder realized price chart won't really work, but what I can do is just a rough calculation here. You can test this on your own after this video. But what we historically see is when short-term holders are at unrealized gains of about 33%, or that MVRV ratio is at about 1.33. Usually you see a little bit of a pullback in price action. This has historically been a little bit of a potentially subconscious point of profit taking in the market. And if we assume the current realized price, well, we don't assume, we know it is about $90,000, and just multiply that by a value of about 1.33 to assume a 33% unrealized profit, that actually aligns very nicely, giving us a value of $119,700 with what we saw previously on the Bitcoin cycle master chart, currently about 120K. So if we can blast past that $110,000, $112,000 level that the golden ratio multiplier is currently outlining, then 120K will probably be a pretty substantial and key point in the Bitcoin price action. What we can also see is similar to what we saw on the value days destroyed metric, looking at the 1 year hodl wave, just zooming in over the previous couple cycles. This is again flatlined, indicating that those that have been holding BTC for over 1 year have stopped transferring BTC to new market participants, stopped putting it on exchanges. They're seeing the opportunity cost of BTC over the next few months, and selling here just clearly doesn't make any sense. The strength that Bitcoin's price action is showing indicates that higher prices seem an inevitability. I know when it comes to investing, we can't talk in certainties, but when all the data is pointing towards one outcome, we just have to play the probabilities. And this deceleration we've seen in this metric is actually something we don't see too often during pretty rampant bull cycles. The only really similar indication I can find is in the previous double peak cycle, if we just zoom in here, where we had this massive run up, like we maybe could associate the run up to 74K, the first run above $100,000, where this declines, we see some profit taking from long-term holders, flattens out as price stabilizes before we get this second leg up. Now, I'm not saying we're going to see a double peak cycle or anything like that, but this is interesting to note that we are seeing a massive reduction in the profit taking of Bitcoin's longest holders, even above $100,000, really indicates the positive sentiment that we're seeing in the market. And just along with that, again, a somewhat similar metric, looking at the realized cap hodl waves. This is the influence in the realized price by age band. So for example, if we were to just isolate 24 hours, that would show the influence on the realized price. The total realized price is currently about $42,000, I believe. That's shown the influence that people that have just been in the market for the last 24 hours are having on that price, essentially showing that they're accumulating at considerably higher prices than previous bands. When we get these huge red spikes to the upside, new market participants are considerably more willing to pay substantially higher prices for BTC. And what we can do is just take off everything apart from, say, 6 months and below to really just isolate to short-term holders. And again, this still looks like we have considerable upside room to go. This metric usually tops out above 80%, pretty much exactly as Bitcoin's all-time high is occurring, whereas right now we're not even at 60%. So potentially only 3/4 of the way through the cycle, purely just looking at this metric. I know that's not an exact science, but either way, until this metric starts getting considerably higher and we're seeing people potentially start paying irrational prices for BTC, things look pretty healthy. And this is all just from an on-chain perspective. What we can also see is looking at a more macro and institutional point of view. Looking at the ETF daily flows, we can see institutions are rampantly buying BTC. There's no stopping them, it seems, especially post-inauguration. Everyone has maybe come to the realization that things are going to look incredibly positive for crypto over the coming months and years. So institutions are accumulating hundreds of millions, nearly billions of dollars a day. In fact, we did nearly on the 17th of Jan see $1 billion of inflows into these ETFs, which is pretty massive considering when these launched, there was a little bit of uncertainty of actually how positive these products would be. And now we've seen, I think, around $40 billion cumulative flows into these ETFs in about a year. By far the most successful ETF launch ever. And this lines pretty nicely with a shift we've seen in traditional markets, traditional economies. There's a little bit more of a risk-on sentiment now. Over the past few weeks, this is looking at the high-yield credit cycle or the risk appetite for riskier corporate bonds. What we can do if I just zoom in over the past few months and years and just angle the chart so it's a bit clearer to see. What we can see is over the past few months, this was rallying higher as potentially sentiment was getting a little bit more bullish. But over the past few weeks, this has been actually declining, indicating a less risk on sentiment and in traditional markets, people less willing to rotate into more speculative assets. But over the past few weeks, this has actually begun rallying to the upside. People are a bit more optimistic and bullish on the future of not just Bitcoin, but markets in general. And this lines pretty nicely with what we've seen in the US dollar strength index, or the DXY, which has been rallying incredibly hard over the past few months and definitely limiting Bitcoin's upside potential, which really outlines the strength of BTC to have this massive bullish momentum to the upside, even in spite of, well, let's be honest, less than favorable macroeconomic conditions. But if we just zoom in here, we can see again, this is hopefully changed its trend to the downside. I know it's only been a few days really that we've seen this, but it is really starting to plummet. So hopefully if this continues and reaches, obviously not new lows, but really starts decreasing to the downside, potentially lower lows than we've seen in the past few years, then that would massively increase the potential for BTC. And I think along with that, another great metric to look at is the global M2 versus BTC year-on-year chart. We've seen a few people potentially mentioning that this 4-year liquidity cycle that we've historically seen may not happen this time. Maybe we've seen too much contraction and quantitative tightening in global banks and central banks, where maybe we're not going to see anything similar to what we've seen in previous cycles. But this has once again just started trending to the upside. Just because we had a temporary pause in this metric doesn't mean that the macro cycle is over. And I think one other bullish point we can look towards is following the current president's previous inauguration in January 2017. What we can see is the global M2 at that point in time had again, for the months prior to that, had been contracting, a little bit of uncertainty in the markets. But post-inauguration in January 2017, that really sparked the massive exponential rally we had in BTC and huge quantitative easing we saw pretty much globally. So I think even though we've had a little bit of uncertainty over the past few weeks, and we can still expect a little bit of volatility going forward as new economic policies are coming into play, overall we have good data to back up that we should be bullish from an economic perspective over the next few months. From an on-chain perspective, everything looks great too. And really, there's no reason to be bearish here. The momentum can definitely be sustained. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on on BitcoinMagazinePro.com. Your number one source for Bitcoin analysis. So just to summarize, by all metrics, Bitcoin looks incredibly healthy and primed for continued bullish price action from both an on-chain market cycle and macro perspective. I kind of already said the next part there. The macro environment is still suboptimal, but improving, like we could see in the DXY, the high yield credit sentiment all over the place today. The global M2 money supply, they're all starting to actually change their trend in a more bullish momentum, and we have reason to believe things will continue to change in our favor over the coming weeks and months. And this will increase the upside potential of Bitcoin price action as more capital flows into speculative assets. It's been a long day, give me a break. More speculative assets from both retail and smart money. What we can say though is volatility can continue to be expected as US economic policies come into effect. Are we going to see a Bitcoin strategic reserve? Are we going to see massive bullish inflows into the BTC markets from other nation states? Who knows? But either way, even the fact that we're having that discussion is incredibly bullish for the space and is bound to bring some volatility over the coming weeks and months. So just be warned, but overall, to summarize the summary, things look incredibly good. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, for a fraction of the standard industry price. And let me know what your thoughts are on the current Bitcoin market from a data-driven perspective, from your own gut feeling on how bullish we really should be. Are you thinking along the lines that I am, where we should be bullish for the next few weeks and months of BTC? Or are you maybe taking a little bit more of a neutral, even bearish approach? Let me know your thoughts down in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.